Welcome back to The Explainer. So, when you're looking at a chart and suddenly currency prices just aggressively start jumping all over the place? Well, invisible forces are driving that market, right? Today, we're actually going to map out the entire foreign exchange ecosystem. We're going to figure out exactly who makes up this massive financial food chain.
Which brings up a really vital question about market microstructure. Who are you actually trading against? Like, when you click that buy button and execute an order, who is on the other side of that trade? Let me tell you, it is rarely just another retail trader sitting in their home office.
Okay, let's dive into this. The reality here is that the foreign exchange market is totally dominated by the absolute largest financial institutions in the world. We're talking about an absolute ocean of capital being pushed around every single day by governments, massive banks, and multinational funds. Understanding what actually motivates these giants, that is your absolute key to decoding price action.
Let's jump right into Section 1, the apex predators.
Sitting right there at the absolute top of the hierarchy, we have the major central banks. We're talking the heavyweights, the US Federal Reserve, the European Central Bank, the Bank of England, and the Bank of Japan. These whales are literally managing monetary policy and the economic stability of entire nations. Listen, when these guys move, they are not riding trends. They are the ones creating them.
Now, what's really interesting about this comparison is the stark contrast in what actually motivates these two massive players. Central banks, they don't trade for profit. No, they're stepping in to influence their currency's value, tweaking interest rates just to keep their economies stable. But on the flip side, you have your commercial and investment banks. They're handling millions of transactions for ultra-wealthy clients, and they're aggressively trading for their own proprietary profits. That kind of high-volume trading heavily influences short-term price movement.
Moving down the food chain, we arrive at Section 2, the global operators.
Picture a Japanese car manufacturer for a second. Let's say they're selling tons of cars over in Europe, which means they're receiving a bunch of euros, right? But here's the catch. They still have to pay their factory workers back home in Japan, so they absolutely have to exchange all those euros into Japanese yen just to cover their operational costs. The thing is, they aren't trying to analyze charts or predict market moves, they're just doing regular business. But by doing so, they're injecting this massive mandatory volume straight into the daily market out of sheer necessity.
Now, beyond those massive corporations, you've got hedge funds managing billions of dollars. They're jumping across stocks, bonds, commodities, and currencies, just hunting for aggressive returns, which often creates these massive price spikes during big economic events. And meanwhile, you have actual national governments constantly in the mix too. They're borrowing money, repaying international debts, buying foreign goods, and stepping in to manage their massive currency reserves. It is a wildly busy ecosystem.
Which brings us to Section 3. The retail realm.
For everyday people to access this massive ecosystem, they can't just walk into a central bank, right? Retail participants rely entirely on Forex brokers. Think of a broker as your ultimate gatekeeper. They're this vital technological bridge that connects individual traders directly to those massive institutional liquidity providers we just talked about.
And that includes all the retail traders out there. Now, millions of individuals trading their personal accounts for profit still only make up a tiny fraction of the total daily market volume. But here's the really cool part. Thanks to modern technology and proper prime liquidity access, anyone with an internet connection can now jump in and execute trades in the exact same arena as the global banks and hedge funds.
So, how do you survive out there? Welcome to Section 4, Swimming with Giants.
Listen, if you want to succeed, it is absolutely vital to recognize the power dynamic at play here. You've got market makers, your central banks, investment firms, multinationals. They actually have the sheer capital required to move the market. Then you have retail traders. We are market reactors. We are the little fish. We simply don't have the capital to create the waves ourselves, so we merely react to the massive volatility generated by the institutions.
So the crucial point is this. Your goal isn't to fight the big players. Your goal is to trade in the exact same direction as them. As a retail trader, when you're analyzing economic news, interest rates, or market sentiment, what you're really doing is tracking institutional order flow. You want to align your bias with the central bank's tide. You literally never want to swim against it.
And this brilliantly illustrates how the market actually thrives on competing agendas. Think about it. Central banks are hunting for economic stability. Commercial banks and hedge funds are hunting for profit and handling client transactions. Multinationals are just trying to run their international businesses, and retail traders are looking for personal profit. It's the constant intersection of these vastly different motivations that creates the immense rolling liquidity of the Forex market. It is all connected.
So the next time you open up a chart, remember exactly who is providing that liquidity. In our next explainer, we're going to build on this foundation by decoding how currency pairs are actually structured and how you can read institutional pricing like a pro. If this deep dive brought you some value today, definitely make sure to like, subscribe, and turn on those notifications. But I'll leave you with this final thought. If the big institutional players hold absolutely all the power, what subtle clues are they leaving on the charts right now for you to find? Keep studying, and I'll see you in the next explainer.